If you've been thinking of buying a house, well, today is your lucky day. You've just found my ultimate guide to buying a home. Hi, my name is Bobby Robards with Allison James Estates and Homes, and this is my ultimate guide to buying a home. In this video series, I'm going to cover the major questions that most home buyers ask when purchasing a home, from just thinking about buying a house to me handing you your keys and beyond. And we're going to do it all in easy to digest, bite-sized chunks. So let's get started. A question I always get when I meet a potential home buyer is, what do I need to do to buy a house? Well, as they say, there's more than one way to skin a cat. Actually, that's a little morbid. Well, as they say, there's more than one way to bake a cake. And just like baking a cake, if you have limited experience, you're going to want to follow a proven recipe. Step one in the home buying recipe is to prepare financially. Are you going to be financing the purchase, or will you be paying cash? Unless you just hit the lottery, chances are you'll be financing, otherwise known as getting a mortgage. So how does that all work? Well, when a mortgage bank determines if you qualify for a loan, they will review what is referred to in the industry as the 4 C's. That's your capacity, capital, collateral, and credit. Don't worry, I'll explain it all in a second. But in addition to that, each lender has specific processes and requirements to meet. So what do all those C words mean anyway? Capacity refers to your ability to pay back that loan. They're going to want to know things like your employment history. Typically, lenders like to see at least 2 years history in the same profession or employer. Oftentimes, this can include time in college, as long as it's in the same field. Your income, which will include the last 2 years of W-2s, tax returns, and the most recent pay stubs. And your debts, which will be used to calculate your debt-to-income ratio, or DTI. For this ratio, they will take the total monthly payments that show up on your credit report and divide that by your total monthly gross income and come up with a percentage. But I'll leave the details of that to your loan officer to explain. Capital is the value of your asset accounts. This includes bank accounts, money and retirement accounts that you have access to, such as 401ks, and equity in your home if you are currently a homeowner. The lenders want to see that you have access to money to make your payment in case something happens to your income, like job loss or injury. Collateral is the house you're going to buy. The bank satisfies this requirement by ordering an appraisal. They want to make sure that their investment is safe should you become unable to make your payments. And last but certainly not least is yours and any other borrower's credit scores and reports. This shows the bank how financially responsible you've been. Have you been making your payments? Have they been on time? Do you have any collections, judgments, or liens against you? That will all show up on your credit report. But don't worry, less than perfect credit doesn't mean you won't be able to buy a house. It just might make it a little less favorable or a little more difficult. What I mean by that is maybe you won't get the best interest rate, or maybe you'll have a couple of hurdles to overcome. In any case, we'll know the best actions to take to get you in position to buy a house. Whew, that is quite a bit of stuff to try to figure out. I mean, where do you even find out this information? Luckily for you, a great realtor and an amazing loan officer will help you determine where you are at in each of the 4 C's categories and how close you are to buying a home. If you're not quite ready, don't get discouraged. We'll give you a bulletproof plan on how to get there, and best of all, we do it for free. So what's the benefit after doing all that work to get your mortgage all squared away? Well, I'm glad you asked. 1, you will have the complete financial picture all figured out. You will know how much of a house you are comfortable buying, which will establish your budget, and you know what the payment's going to be on that loan amount. More importantly, if we've taken time to take your pre-qualification to the highest level and actually had the bank's underwriter review it, you will be able to submit a stronger offer with a pre-approval letter. Your offer will be more attractive to potential sellers because we will have a letter showing that you are a rock-solid buyer and the lending will not be an issue. Armed with that information and a pre-approval letter makes you a much more informed and qualified buyer. Thanks for watching, and I'll see you in the next video, How to Find a Good Agent.